It's now time to hit social media for cash tags. For that, we'd like to welcome in Landon Swan, the co-founder of LikeFolio.com, and we have Evelyn Baker with us as well. We're going to be talking some CVS.
Right, so CVS Health, ticker symbol CVS, of course, they report earnings tomorrow morning before the market opens, and shares are only slightly up on a year-to-date period. However, they are down on the year. But when you compare that to, their competitor, Walgreens Boots Alliance, they have been showing some strength on that year-long period. And Landon, I saw that in the information that you sent over earlier, that might be another case for strength in CVS. Can you tell us what you found?
Yeah, so CVS is one that we've actually done really well on earnings plays. We made a good call last quarter, made some money there, and it's all based on strength on purchase intent. If you look at the purchase intent chart, again, that's when people are talking on Twitter about going into these stores or having bought something, you can see the purchase intent is essentially at all-time highs. And the stock, as you mentioned, is, it's about where it was at the highs in February, but it's really not taking off. And so it's pushing those levels, but in our opinion, it's a little bit undervalued. And when you look at what analysts are expecting, it looks like, depending on who you ask, they're expecting a mostly flat quarter-over-quarter revenue, when we've got purchase intent up about 7% quarter-over-quarter. So we're showing some strength. A lot of it is fueled by their changes after their acquisition of Aetna. They've got a lot of health-focused programs getting people to get more prescriptions and buy more medicine to keep people from getting sick, that kind of things. And so that focus shift, I think, is driving revenue a little bit higher, and it's showing in purchase intent.
Landon, I think the acquisition of Aetna and the corresponding how much that cost really caused some of the trough that we've worked our way through. Remember, it was December of 2017 and then closed in November of 2018, but I think this is the recovery from that is what you're starting to see now. And now that they're through that period, I wonder though, I think this stock looks like they've gotten through the tough period of all this. What I want to know is, do you see mention of Aetna in some of the social media posts and how they're kind of through the woods on this? Because they're looking for about 170, whisper number 174 on about $62.5 billion in revenue.
Right. When it comes to Aetna, we don't see a lot on social media. And just so you know, when a company acquires another one, what we'll always do is we'll combine their history. So there's not going to be any kind of cliff on November of 2018 when they add all those mentions in. So we actually add the histories together. So what you're seeing is a chart of as if those companies had always been together. But I think you're right as far as the stock's going. It's through the tough part, and now analysts are wanting to know, how is that acquisition going? There's obviously a drive to be more on the health side of things. They're opening up what they're calling health hubs. They want to open, I think, about 1,500 in the next couple of years, where people are going to be going in for more of a health clinic. There's wellness rooms, dietitians, that kind of thing. So it's a lot more focused on health and less on greeting cards, and maybe even less on alcohol, which I know they sell. So kind of a shift a little bit in the stores. And what we're seeing here, again, I mentioned that 7% quarter over quarter. You can see there's also a nice year over year jump on the quarterly bar charts here for purchase intent. Basically, it's looking like a strong quarter, but I do think a lot of the reaction to this earnings report is going to come from how people see this Aetna acquisition coming through. And so far in our data, it's looking good.
So Kevin, to answer that question as well, when I was looking on Twitter this morning for tweets about CVS, I saw a few mentions of the acquisition with Aetna, and some of them were in a more negative light as far as having to switch up their go-to Walgreens pharmacy because Aetna would only allow them to go to CVS, and sometimes it's more convenient or whatnot, but that was just one thing that I found to answer your question. But this next tweet speaks of that acquisition as well, and it says they want to be a one-stop medical shop in every zip code in America. Doctor's office, pharmacy, insurance coverage, all in one place. Really brilliant when you think of it. And the rise of those Stat Health walk-in clinics prove people go to a store when sick. I've definitely gone to a Minute Clinic, especially when they're convenient and you can just walk in.
Yeah, sometimes you just want some cold medicine and a flu shot or something to get right, and you don't need a complete workup and physical every time hey, I have a cold or I have a sore throat. Just get me in and get me out, because I mean everyone has nightmares from their youth of sitting in doctor's offices. So if they can alleviate that and make that a more easy process. I think they're onto something here.
Yeah, Landon, quick question regarding your data and kind of tying this all in. I don't know how much you look into kind of demographic or regional data around this, because not everyone's going to have location coverage on their tweets anyhow, but I feel like this would skew largely to urban areas. Somewhere like a Chicago where we're at right now, a CVS would function more as a convenience store, as there's not a whole lot of super Targets or Walmarts around, but also it's easier then for what Evelyn's talking about in this tweet for someone to walk into something like a CVS or a quick clinic than go to the hospital. So I don't know if you have any insight onto that, Landon.
We don't have a lot of demographic information on Twitter or location information. People generally don't share that. But I think that you make a great point, and so does Kevin. If you're sick, you want to just go in and get a quick fix, and the fact that the pharmacy is there and you can get, that real quick wellness clinic checkup and go get the drugs that you need and get out. I think that contributes to the fact that they filled 19% more prescriptions year over year on the last quarter. So they've got a lot of programs that are intended to keep people on their prescribed medicines. They kind of brag about, when there's more sick people, costs are going up, they're getting more pills out. It's almost, their earnings calls are almost an advertisement for socialized healthcare. It's crazy. I'm not going to get into that, but it's wild to see, what they're profiting off of. But, this is capitalism. They're doing a great job of making money, and they're giving people exactly what they want. Now, you don't want to go wait in the waiting room and then have to drive to a different pharmacy. And so this shift, I think, is really smart, and they're doing exactly what they're supposed to be doing after this acquisition.
Believe me, you guys are a little young, but I have what seems like 100 children. And I remember going in a doctor's office going, come on, it's an ear infection. Give me some amoxicillin and let me get out of here. I got to go back to work. And it's literally that. If you could do that quickly, that is a huge quality of life issue for a lot of people.
No, it's great. You can make online appointments, or you can just walk in and they have kiosks there where you can put your name down and sit down and read a book or come back. It's really great. And I think, too, this is how CVS has sort of been differentiating itself from Walgreens. And we know that the pharmacy sales really carries revenue for both of these companies. However, in the last earnings report, Walgreens reported a decline in their retail and over-the-counter sales, whereas in CVS's last report, they saw growth. So they're seeing growth on all fronts.
Lunch.
Exactly. But this next tweet I want to bring up says that CVS has consistently outperformed over the last several quarters. Aetna's $70 billion acquisition in 2018 is surely making it a highly integrated player and helped increase profits. My take is that Q3 earnings will also be aligned to market expectations. Kind of back to what you said, Kevin, but Landon, this is just one Twitter user's take on CVS's earnings that come out tomorrow morning. What is yours? After all this information and data that you've brought to the table, how do you think CVS will fare?
So I think that, again, based on the analysts you ask, I think it's going to expected to be fairly flat on revenue. And again, we only measure revenue. We have no insight into expenses. And so that's a big question mark. But if you get the top line right, you're generally going to do well on the trade. And it looks like for us, purchase intent is up quarter over quarter and year over year. And analysts are maybe not expecting an increase. So we are definitely bullish on this report. Not super strong because it's not a company where you see a huge volatility on revenue. But we do think that, if you had to make me pick, I'm going to say bullish on this report.
Landon, we'll leave it there. Great stuff. I learned a lot from this conversation about CVS and where it's going to go. So I appreciate it. And Evelyn, thanks to you as well.